Ladies and gents, we're in trouble. Not according to me, but according to the head of the BLS, the head of the Bureau Labor Statistics, the very prominent economist who has been appointed by President Trump himself to sit on the chair of the BLS, the guys that accumulate the inflation data, the labor market data. He has stated in his post like 20 minutes ago, he mentioned that further acceleration of inflation in the next print is coming along. We are in trouble. This is after we got the CPI data come in at 3.3%. 3.3%, the highest inflation data since early 2024, more specifically, March of 2024. That is a full percentage point, almost full percentage point increase on the inflation rates from the last reading. And honestly, I feel terrible for Fetcher Powell because the poor guy had to weather the COVID money printing inflation. Then he had to weather the tariff inflation. Now he's getting the geopolitical conflict inflation that he needs to weather and bring down to 2%. And whenever he gets close to bringing inflation to 2%, something else happens. So it's very unfortunate for him. And in this video, we're going to go through what this 3.3% means for the markets, a reading of why we came up to the 3.3%, why so high, why are we drifting so far away from the Fed's 2% goal, and does this mean we don't get interest rate cuts? Well, if you want to find out the answers, stay tuned until the end of today's video. Additionally, Michael Saylor bought 1,500 Bitcoin in just the past 12 hours alone. This number is going to go higher and higher and higher as we progress along in the day. This number equates to 3 times the Bitcoin that has been issued into the supply from miners. Unbelievable. I think it's the reason for Bitcoin staying so strong at $73,000. I want to discuss with you where I turn bullish and important levels to be watching out for. Ton saw a big upgrade, according to Telegram founder and CEO Pavel Durov. We're going to take a look at the altcoins that went up bananas in the past 24, and we'll also cover the updates in geopolitical conflict. So in summary, everything that you need to know about markets will be in this video. If you enjoy it and learn something by the end, then please do make sure to destroy the like button, share this video with your friend who's also a crypto enthusiast, and subscribe for daily content as such. If you're looking for a place to be trading Bitcoin, cryptocurrencies, check out the first link in the description down below over on any Crypto Kid video, and you can go ahead and sign up to LiveX to trade Bitcoin and other cryptocurrencies, 2 weeks to trade Bitcoin and other cryptocurrencies. And on BTCC, apart from crypto, you can also go and explore things like crude oil, things like gold, things like silver, things like the S&P 500. You only need your email address and password to sign up. All right, let's get the show started. First thing is first. Let's go and talk inflation, inflation. What happened there? Well, we came up to 3.3% highest in basically 2 years. Actually, the US energy inflation surged 10.9% in March 2026 amid the military operation, marking the biggest monthly jump since 2005. It gets even worse. The gasoline index increased 21.2% over the month, the largest monthly increase since the series was first published in 1967, back in the Stone Ages, before seasonal adjustment, before humans. Gasoline prices increased 24.9% in March. The index for electricity rose 80 basis points in March. The fuel oil index increased by 30.7% over the month, the largest increase since February 2000. Gas prices, natural gas prices have decreased because the sanctions towards Russia are being decreased by the US. So why did we get a 3.3% CPI reading? It's purely because of crude oil. All right, it's purely because of crude oil, because crude oil ran so much, because fuel, gasoline, it went up to $4.16. We're getting CPI. We're getting a higher CPI data point. CPI inflation is produced of a basket of goods and services, right? A basket of goods you have coffee, you have X, Y, Z, and energy makes up a big part of it. And what is energy demonstrated by? It's demonstrated by crude oil. Apart from that, apart from just the petrol that you fill your car up with, the kerosene you fill up airplanes with, petroleum derivatives are in the clothes that you even wear. They're in everything. That is why crude oil going up is so impactful to the inflation rate. All right. And you can clearly see, right? US gas prices officially posted their largest monthly jump in CPI inflation since 1967. I need to re-express that. Since the whole thing actually started, you can clearly identify um, that fuel and energy was the biggest contributor and the only reason for why inflation increased to where it did. All items less food and energy, which is the purple line, so it excludes food and energy, have seen a small uptick, but nothing too tremendous. But when you look at everything, they have gone through the roof, represented by the blue line. Core CPI, that excludes the volatile stuff, food, energy, housing, it also saw a small increase. Like if we hadn't gotten the military operation, inflation would have still likely ticked up from 2.4% to perhaps up to 2.5, not 3.3. But energy was the biggest issue. According to the head of the BLS, EJ Antoni, he mentions that even though that's the case, we will likely see even higher core CPI in the months to follow because petroleum derivatives, I think they're going to continue at where they are for a bit more. We don't know when the war is going to finish. I pray to God that it finishes ASAP, as swiftly and as safely as possible. But we'll check out the latest updates there. If it doesn't, then we also know that things like crude oil jumping, it reflects on the inflation releases. It takes 2, 3, 4, 5, 6 months until the impact of crude oil going up goes and translates to the inflation reading, or anything that happens externally. Those external factors, it can take up to half a year for it to translate to economic data. So I think the next data point for April, so April's inflation, that crude oil is still trading at $100. So April's inflation will also be high. I think May's inflation will also be high. So for 2, 3, 4 months, I see inflation ticking higher and ranging in the 3% areas. This uptick in CPI for March was just the beginning. Look at how energy prices run, and then a few months later, CPI fully catches along. CPI fully catches along. I believe that we're going to do the same. And in this environment, is it fair for Fed Chair Powell to cut rates? I don't think so. We can't ask the guy to cut rates. He had to weather COVID impacts. He had to weather the Russia Ukraine situation. He had to weather Trump's tariffs, and now he has the whole military operation that he needs to weather. So can you reasonably ask Fed Chair Powell to cut rates? No, I think it's completely unfair, and I think the right path to follow is either keep rates where they are or to potentially even hike rates a little bit. I wouldn't be upset with Powell if he did that because it's fully within his rights. The current predictions state that until 2027 we don't get a rate cut. Even mortgages are at trouble. If rates stay higher for longer, then mortgage rates also remain higher for longer, hurts the economy. It's a big, big, big dilemma. Like, what would you do? What would you do? I think they're going to keep rates where they are. They're going to cut in 2027. And whilst they're cutting, historically, whenever the Fed cuts rates drastically during that big cut, you see markets tank, you see a recession, markets reset, and then you continue going up after the big rate cut as people borrow money at cheap costs, and with that borrowed money they put it into things like the S&P 500. Actually, that would align up pretty well with the price fractal from 1996 into 2001. The yellow lines reflect 1996 into 2001. If we put the prices of current S&P over the fractal, then we could anticipate a sweep of the highs, and in 2027 a big go downhill with rates also being cut, dramatically. At least that's what the market tells us for the time being. How does that affect Bitcoin? Well, Bitcoin is sitting at $73,000. For me to be bullish, I need to see Bitcoin break 77, why we discussed on previous videos. But just keep your eye out on the following lines of resistance and supports. The bear flag is still active. 77 needs to be broken above with confirmation for it to become inactive. If you break above 77, you can also make the case that this was a W pattern, happy days, and you move along up into the 87s, the 86s. For this, I got to see 77 be broken. Until or if that happens, then sadly, you're in a bearish trend. You are in a bearish flag, so I will be bearish. No need to complicate things. For the long term, though, that's only for the short term. For the long term, I can't be more bullish. I'm buying more Bitcoin every single day for my long-term hodl portfolio that I'm planning on keeping for 4 years, 10 years, 20 years, 30 years, for however long I'm alive. I want to keep buying and hodling. You can see that Michael Saylor's preferred equity Stretch has purchased 1,500 Bitcoin so far today. They purchased 2,000 Bitcoin yesterday and another 2,000 the day before. Currently, only 450 new Bitcoins are released into the circulating supply through mining. So this guy is buying up like 5x the amount of Bitcoin that's released on a daily basis. Do you understand how crazy that is for supply side? Do you understand its impacts, the impacts that Bitcoin will eventually receive from that alone? And then you have the ETFs buying. Retail isn't here. The retail will come back in when there's money printing. It's all going to be a big shock for the Bitcoin supply. Iran is charging vessels $2 million, some of it in Bitcoin. So all of this buying pressure in the long term, I think, is ridiculously bullish. Warren Buffett is a saying. He mentions that I would still be buying stocks even if World War III broke out because you're constantly reducing the value of money. That's what you're doing. You're constantly reducing the value of money. In 2020, the government printed double the money that was in existence. They doubled the money to relieve the economy from potential depression. They doubled the money. They gave everybody stimulus checks, and boom, suddenly everyone was doing fine. So you're constantly reducing the value of money, and to hedge against that inflation, what do investors do? They put it into the S&P 500. They invest. So this is why back in the day Warren Buffett made such comment, and this is why I am constantly buying Bitcoin, because I think it is the ultimate hedge against inflation. In the altcoin world, Pavel Durov, the CEO of Telegram, mentioned that the Ton blockchain just got an upgrade and is now 10 times faster because block rates increased by 6 times. Transactions are now basically instant, sub-second. This was step 1 of 7 to make Ton great again. And the next step is to cut the already low transaction fees by 700%. Well, they can't do that, but they can cut it by up to 99%, which would be great. I've used the Ton blockchain. I think their integration into Telegram works phenomenally well. As a long-term HODL portfolio token or coin, I think Ton makes sense now that digital commodities basically refer to layer 1 blockchain coins as non-securities. I think Ton for the long term could be a strong bet, and I have Ton in my portfolio, and I will be looking to keep Ton for longer and longer. Some altcoins went bananas, including Dash and Zcash. I'm against the privacy coin narrative. I spoke about it in detail over on the Moon Show today, so if you're curious, go ahead and watch that show. Zcash is up 20%, Dash is up 32%, BitTensor, the supposedly new Bitcoin, is down 18%. What happened there, Mr. Jason? What happened there, Mr. Chamath? WFI is down 12.9% because the WFI team borrowed $150 million in USDC to perhaps, I don't know, make different investments or maybe support the project. We don't know the reason for why they did it. It could be a very good reason. It could be a great reason for the project. We just don't know the details. Upon that speculation, the price of WLFI has decreased by 12.9%. Finally, updates on the current geopolitical conflict. The Pakistani Prime Minister mentioned, or Pakistan Prime Minister aide mentioned, that Lebanon is in fact included in the U.S.-Iran ceasefire agreement. Yesterday, President Trump said that that Lebanon wasn't included. Pakistan Prime Minister aide said that yes, it is actually included. We're seeing the Iranian delegation arrive in Islamabad. JD Vance is en route to Islamabad to discuss a long-term peace deal. Hopefully that happens Iran's parliament speaker mentioned that ceasefire in Lebanon, release of Iranian blocked assets must occur before talks. White House advisor Hassett said that Hormuz can be opened within 2 months. 2 months. That would mean 2 months more of higher oil prices. That would mean 2 months more of higher inflation and higher rates. So just keep that in mind. And finally, JD Vance says that negotiations with Iran will be positive. That is a wrap for today's video. Thank you all so much for bearing with me, and I'll see you all on tomorrow's updates. Thank you and take care. Bye bye.